Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol USO. Today we are up 3.9% on the 1 hour chart. We are currently at overbought RSI and the 1 hour MACD is looking pretty healthy. And for the 4 hour chart, we approach positive MACD and we have not reached overbought RSI yet. And if we extend out to the daily chart, we start to see a convergence shaping after diverging back in November 27. We saw a nice reversal, and we're about to see a divergence from the 9 moving average and 18-day moving average. However, it made a nice reversal. After that, we had a gap up between December 3rd and December 4th, so overnight. So as for support, I do see support possibly around the 200-day moving average, and that also coincides with the 9-day moving average, which is around the price of $11.97. So I'll mark that as our immediate support if we do make a reversal and head down lower. And as for resistance, the next resistance that I see is this price right here. We made or hit resistance back in July 11th around a price of $12.60. After breaking that resistance, we have once more another resistance back in September 17th. At the moment, we need to break this first. Overall, it's in a very good healthy trend. Since we are broke above the 200-day moving average, we see it average above or average higher lows, which is a real good sign for a reversal to the upside. So if we were to move on higher, that price movement is roughly around 3.2% to the upside, and to the downside is roughly 1.9% to the downside. So the forecast model for WTI is now available in the link below, so do check it out for USO. We also have some for Gush and Drip as well, so do check out the models that I do not go over in the video. So yeah, in the forecast model, I'll go day by day where WTI crude oil will head to next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to December 29, 2009 to March 26, 2010. So let me point out why these two charts are similar. So what we have here in the current trend, we started off touching the upper Bollinger Band. So let's just make this a little bit neater. And we made a reversal to touch the bottom Bollinger Band right here. After touching the bottom Bollinger Band, we averaged above the middle Bollinger Band for several days. We see it slightly dip at this instance, and after that we made a nice reversal to touch, well, right here we haven't quite touched the upper Bollinger Band, but a very good attempt, and I do see that happening in the next coming days. So on the trend here, we start to see a similar pattern as well. We start off at the upper Bollinger Band as well, and then touching the bottom Bollinger Band. After touching the bottom Bollinger Band, we average above the middle Bollinger Band. So we have that instance there. And then after that, we see it's revert slightly below the middle Bollinger Band, and then right towards the end, we see it broke and touch the upper Bollinger Band right at the end. So what we have is 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. The model that we just examined was December 29, 2009 to March 26, 2010. Back then, WTI crude oil was up around 6.6%. So overall, I do see WTI climbing higher in the next coming days. And that is all. This forecast model is now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.